Hey everyone, in this video I thought I'd provide a brief overview of what's going on with Fiverr International stock. So let's get right into it with what the president and CFO talked about for their performance at their most latest update. So the CFO saying we are pleased with our progress and expect to continue to steadily improve our operating leverage across all expense lines for the rest of this year. Now, what that means is that they expect revenue to grow, but they expect expenses to grow less than revenue. Less than revenue. So, what that does is it creates leverage. It creates a gap between revenue and expense, which is another way of saying we expect our profit margins to expand throughout the rest of this year, which is really good news if you're an investor. Active buyers in the first quarter were 4.3 million as we continue to see stable active buyers trend. That's good news also because Fiverr saw a bit of a decline in terms of active buyer growth when the economy kind of slowed down after the Federal Reserve raised interest rates by 500 basis points in a little less than a year. So that's a good sign that it's stabilizing, it's seeing growth again. Next, sales and marketing expense as a percentage of revenue in the first quarter was 43.5%. That was an improvement of 560 basis points from first quarter last year. That means in the first quarter of last year, sales and marketing expense was 49.1%. So it's a smaller percentage of revenue. That's good news. That means revenue is growing faster than sales and marketing expenses growing, which is what you want to see. There's many companies that don't experience this, and for those companies, I'm highly critical of the company for spending so much money on sales and marketing when they're not seeing a good return on that investment. That's not the case for Fiverr here. They're seeing a good return on investment. They're seeing leverage in terms of their revenue to as sales and marketing. The spend per buyer in the first quarter was $262. That was up by 4% year over year. So not only are they seeing growth in terms of active buyers, but the buyers are spending more money on the Fiverr platform, and they expect the spend per buyer to gradually improve in the second half of the year. So this spend per buyer growth is actually going to be higher in the second half of the year. In the first quarter, Fiverr's take rate improved to 30.4%, expanding by 80 basis points year over year. Now, let me talk a little bit about the take rate. What this means is when somebody spends $100 on the Fiverr platform to hire someone, that $100, 30% of that goes to Fiverr. So the buyer of the platform pays 100, but the seller, the one that's making the money, only will get $70 because they pay 30% to the Fiverr platform. That's its fee for offering its services. Now, I will say 30% is one of the highest industry wide in terms of a take rate. Industry wide. And when I'm talking industry wide, I'm talking platform companies. So, for instance, if we look at Uber and Lyft, their take rate is 25% and below, depending on the quarter and the type of business, if you're talking about Uber Eats or Uber Rides. If you look at, let's say, eBay and Etsy, their take rate is, for Etsy, it's 20%, for eBay, it's like 13%. So again, much, much lower than what Fiverr is able to generate here in terms of take rate. So they have the industry best take rate percentage, and that's good for a number of reasons. Number one, it generates a lot of revenue for them because they're taking a larger percentage, but it's also a lever that they can use if they would like to increase activity on the platform. So if they want to boost activity, they can offer a promotion where they say, for this month, we're going to slash the take rate in half. And so sellers will be excited about that promotion because now they get to keep more of their revenue and they can offer better prices, better deals, and that might increase activity on the platform. So it's good for a number of reasons, and it's also good that it's growing, it's rising, and that's true industry wide as well. Platform companies are raising their take rate industry wide. So all of that is good news for Fiverr. And finally, I'll end with their forecast for the second quarter. Revenue at 89 million in the midpoint would be growth of 5%, which would be more than triple the growth rate of the first quarter, which was just 1.5%. And then for the year, they expect growth of 6.5% at the midpoint, which would be more than 4 times the growth rate in the first quarter. So Fiverr really expecting a steep increase in revenue as the year progresses. So good news for those interested in Fiverr stock. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.